Stocks versus real estate, part 2. We're going to talk about the pros and cons of owning real estate. I love real estate. Ever since I started playing Monopoly as a kid, I've always loved real estate. Owning real estate is awesome, but it does come with some risks. Let's talk about the pros first. When you have real estate, you have a tangible asset. That means it's not going to go to zero or going to go away. It might not go up as much as you like, but it's not going to go to zero, so you actually have something. Second, you can get steady cash flow from real estate. So whether you're renting out as a short-term rental or long-term rental, you can bank on how much is going to come in usually because it doesn't fluctuate that much in a normal market. Third, you can get appreciation from the real estate, meaning that you buy it for $500,000 in a year. In 5 years, it could be worth $600,000. Historically, the real estate market has gone up over time. So if you're holding real estate, and eventually it should go up and you should be able to make some money that way. Fourth, there are some major tax benefits to owning real estate. So you got to talk to your tax professional about how to take advantage of those real estate loopholes out there that can give you significant tax benefits. And finally, you can leverage that real estate to purchase other real estate, meaning if you have equity in real estate, you can borrow against that equity to purchase other properties and therefore grow and own a potential real estate empire one day. With all the pros, there certainly are cons. Real estate is illiquid, meaning you can't just take money out whenever you want. You certainly can try to get a line of credit. You can borrow against it, but there are costs involved with that, and it's not a quick process. Second, there's usually a high initial investment. 10, 20, 30% down is normal, especially for an investment property. If it is your first property, you can actually borrow at 3% through an FHA program, and that can be up to a fourplex, which that's a great option as well. Third, it is difficult to manage. So my wife manages our Airbnbs, and you do get annoying phone calls sometimes. You do get late night phone calls sometimes, and sometimes you have to go through eviction process, which is not good for anybody. There is a level of stress to it, and it is work. And if you're not going to do it yourself, you can hire a management company, but then they're going to charge you. So that'll take out some of the profits. Fourth, there's always market risk to real estate. If you live in a place that is hot right now and then might fall off, you actually might lose some of that investment. Again, it won't go down to zero, but you might not get the appreciation that you're looking for. And finally, there's a high transaction cost in real estate. We average about 10% of whatever the selling cost is of the real estate that goes to admin costs, so realtors, closing agents, all of that. If you're coming into real estate, just know that there are a lot of hidden costs. It's a lot of work, but there's some real upside to it, and you can really build some long-term wealth.